There is one business in America where your customers cannot leave. They can't complain. They can't take their money somewhere else. They can't switch to a competitor because your service got worse. And the best part? You don't get paid by them. You get paid by the government, sometimes whether or not the customer even shows up. Now imagine a contract that says the state has to keep your building at 90% full, not should, has to. And if the courts don't send you enough people, if crime drops, if judges get lenient, if a whole generation just decides to behave, the taxpayer writes you a check for the empty beds anyway. That's not a hypothetical. That's a clause. It has a name, and it has been sitting in real contracts, signed by real governors, for decades. This is the private prison industry, and I'm going to tell you something that's going to make half of you furious before we even get to the numbers. It works. Not morally, not ethically. I'm talking about the spreadsheet. As a business model, it is one of the most elegant, defensible, recession-proof machines anyone has ever built in this country. And once you see how the money actually moves, you will never look at a crime bill, an immigration policy, or a tough-on-crime campaign ad the same way again. Because here's what nobody tells you. In the early 80s, a group of businessmen looked at the American prison system, the overcrowding, the ballooning budgets, the political impossibility of building anything, and they had an idea so blunt, it's almost admirable. One of the founders reportedly said you could sell prisons the way you sell cars, or real estate, or hamburgers. Hamburgers. 40 years later, that idea is a multi-billion-dollar industry with publicly traded stock. You can buy it, right now, on your phone. There are people whose retirement accounts quietly go up when incarceration goes up, and they have no idea. But, and this is where I'm going to lose the other half of you, the part everyone gets wrong is the villain. Private prisons hold a small slice of America's incarcerated population, single digits. If you deleted the entire industry tomorrow, the vast majority of people behind bars in this country would not notice because they're in a public facility, run by the state, funded by you. So why does this tiny industry generate this much rage? Why does it print money anyway? And why, if it's so small, do politicians on both sides keep feeding it? The answer isn't a conspiracy. It's worse. It's incentives. It's a per diem rate, a cost per bed, a margin, an occupancy target. It's the discovery that you can turn a human being into a recurring revenue line, and that once you do, the math starts making decisions that no human ever consciously made. So today, we're going to do something uncomfortable. We're going to take the moral outrage, set it on the table, and look under it, at the contracts, at the per diems, at the lobbying spend versus the return, at what a person is actually worth, per night, on a balance sheet. By the end of this, you will understand exactly how this industry makes money, why the outrage aimed at it is aimed slightly wrong, and what the real scandal is, the one hiding in plain sight in the public system nobody's protesting. Let's talk about the economics of owning a private prison. Start in the early 1980s. America has a problem it cannot solve with money, because the money isn't the problem. The prisons are full. Sentencing laws just got harder. The drug war just got real. And the population behind bars is climbing a curve that looks less like a trend and more like a launch. And here's the trap. To build a prison, a state has to issue bonds. To issue bonds, you often need voters to approve them. And voters will happily vote for lock them up and then vote against paying $80 million to build the place you lock them up in. Every politician in America wanted the crackdown. Nobody wanted the invoice. So a small group in Nashville walks in with a solution that is, structurally, a magic trick. We'll build it. We'll own it. We'll staff it. You don't pay a construction cost. You don't float a bond. You don't ask the voters for anything. You just pay us a small amount, per person, per day, and the problem disappears off your balance sheet. That's it. That's the whole innovation. It's not a prison company. It's a financing company that happens to own buildings with locks on them. And it worked, because the pitch wasn't aimed at the public. It was aimed at a governor with a full prison and an empty budget line. And to that guy, this is the greatest phone call he has ever received. Now let's open the hood, because the actual business is simpler than you think, and that's exactly what makes it dangerous. There is one number that runs this entire industry: the per diem. That's the rate the government pays the company for one incarcerated person for one day, depending on the contract, the state, the security level, and how good the company's lawyers were that year, somewhere in the neighborhood of $60 to $100 and something. Revenue is that number, times the number of people, times 365. That's the top line. That's the whole top line. There is no upsell. There's no premium tier, no new market, no product roadmap. You get paid the same rate on a Tuesday in March as you do on Christmas morning. So if your revenue per person is fixed by contract, and it is, there is exactly one lever left, one. And the entire behavior of this industry, everything people find monstrous about it, falls out of this single fact. The only way to make more money is to spend less on the person, not less on overhead, not less on synergy, less on the human being in the cell, because the human being in the cell is the cost structure. Roughly 2/3 of it is labor. Guards. So, fewer guards per unit, less experienced guards. Guards you can pay less, train less, and replace when they quit. And they will quit, because you've made the job worse in order to raise the margin. A guard making poverty wages, alone, outnumbered, on a double shift, is not a safety system. He's a rounding error that happens to have keys, then medical, then food, then programming, the education, the rehab, the drug treatment. Because think about what those are on the spreadsheet. They're a cost with no revenue attached. Worse, if the programming works, the person doesn't come back, and your future revenue walks out the door with them. I want to be careful here, because this is where these videos usually go stupid. I am not telling you there's a boardroom where men in suits decide to sabotage rehab programs to boost recidivism. That's not what happens. What happens is quieter and much harder to fix. Nobody decides. The math decides. A regional manager gets a target. The target gets hit by trimming a line item. The line item is a nurse. Nobody in that chain ever formed the intent to hurt anyone, and the outcome is identical to if they had. That's what an incentive is. It's a decision that makes itself, over and over, while everyone involved keeps their hands clean and their conscience intact. So you're the company. Fixed rate, squeezed cost. What's the risk? Empty beds. Your building costs almost the same to run at 60% full as it does at 95. Staff, lights, debt on the property. Fixed. Which means occupancy isn't a metric. It's the metric. Every extra body in a bed you were already paying for is nearly pure margin. So the industry does the rational thing. It negotiates the risk away, the occupancy guarantee, the bed quota, language in a contract that says the state will keep the facility at a certain percentage full, and if it doesn't, it pays for the empty beds anyway, 90%, 95% in some agreements. There have been contracts where a government agreed to pay for effectively every bed, regardless of who was in it. Sit with that for a second. The state has now taken on a financial interest in incarcerating people, not a moral one, not a political one, a contractual one. There is a line in a budget that gets worse if fewer people go to prison. And if you're a sheriff or a county executive staring at that line, you don't have to be evil to start thinking about what fills it. You just have to be responsible with public money. That's the thing everyone misses. The corruption isn't that the company wants more prisoners. Of course it does. It's a company. That's what companies do. The corruption is that the contract makes the government want more prisoners. And now it stops being a prison story and becomes a finance story. Around 2013, the two biggest players restructure themselves as real estate investment trusts, REITs, the same corporate structure as a shopping mall operator or an apartment landlord. Why? Because a REIT that pays out most of its income to shareholders pays little to no federal corporate income tax. Read that again. A company whose entire revenue comes from taxpayers reorganized itself so it would pay dramatically less in taxes back to those taxpayers. And the logic is beautiful in a way that should make your teeth hurt. The argument was, we're not a service company, we're a real estate company. We own buildings. We lease space. The fact that the tenant is a human being who cannot leave is, legally speaking, incidental. Human storage. As an asset class, yielding a dividend. Both eventually unwound the structure years later, for reasons that had nothing to do with anyone's conscience. But the point stands. For roughly a decade, one of the most controversial industries in America was taxed something like a strip mall, and almost nobody outside of finance noticed. And then something happens that tells you everything about how this business actually thinks. The state prison money starts getting shaky. Contracts get scrutinized. There's political heat. Some states walk away. If you're a normal company, that's a slow death. Instead, the industry finds a new customer, a better one, immigration detention. And it is a dramatically better line of business. Federal money, so it's insulated from state politics. Enormous volume swings, driven by policy rather than crime rates. Detainees held on civil, not criminal grounds. A different legal category. Thinner protections, less oversight. And demand can go from nothing to enormous with the stroke of a pen. Because it doesn't require a judge or a jury. It requires an executive. The company didn't change. The customer changed. Same buildings, same per diem logic, same margin lever, pointed at a population that Congress never voted to create. And that pivot is the tell. It proves the business was never about crime. It was never about justice. It was about finding a reliable buyer for beds. Crime was just the first customer. So by now you've got the full picture, and you're probably ready to hate somebody. Good. Hold on to it, because I'm about to take it away from you. Everything I just described, the squeezed staffing, the gutted programs, the perverse interest in full beds. You're imagining it's the private sector's unique sin, the greedy exception in an otherwise decent system. It isn't. The private prison industry holds a single-digit percentage of the people incarcerated in America. Delete it. Right now. Every facility, every contract, every share of stock. Gone overnight. And the overwhelming majority of people behind bars in this country wake up tomorrow in exactly the same cell, run by the same state, under the same conditions. So the question isn't, why are private prisons so bad? The question is, why does the public system, no shareholders, no dividend, no profit motive at all, produce so many of the same outcomes? Overcrowding, understaffing, gutted programming, medical neglect that gets people killed, facilities so bad that federal judges have had to step in and take them over, and there is not one share of stock anywhere in the chain, which means the profit motive can't be the explanation. Remove it entirely and it barely moves the needle. So the incentive was never really financial. It was something else, and it was always there, underneath. Ask yourself why a prison gets built where it gets built. Not in your suburb. Not near your kid's school. It goes where a factory closed, where a mine shut down, where a town of 4,000 people watched every young person leave and had nothing to offer the ones who stayed. And then a prison arrives, and suddenly there are 300 jobs that pay okay, come with benefits, and cannot be offshored. There's a diner that survives on the shift change, a motel that survives on visiting day, a school district that survives on the property tax. That town is now economically dependent on incarcerating human beings. And this is the part I need you to actually hear. Not a single person in that town did anything wrong. They took a job. They fed their kids. They are not villains. They may be the most sympathetic people in this entire story, and they will fight like hell against any reform that closes that facility. Because reform to you is a policy debate, and to them, it's the end of their town. There is no bad guy in that room. There's just a community that needs the beds full, for reasons that have nothing to do with justice, and everything to do with the mortgage. Multiply that by a few hundred rural counties, and you've built something no company could ever buy. A voting bloc with a structural interest in incarceration. And then there's the ugly bit. The census has historically counted incarcerated people where they're held, not where they're from. So a person from a city who cannot vote, who has no connection to that county, gets counted as a resident of that rural district. Their body inflates its population. Its population determines its representation. Read that slowly. The bodies count toward political power in a place they've never lived, wielded by people they'll never elect, against the interests of the community they came from. That's not a company doing that. That's arithmetic. And it does not require a single dollar of profit to work. Now, if you want to find where the actual predatory money lives, stop looking at who owns the building. Look at who owns everything inside it. Because while everyone was busy protesting private prisons, the industry figured out it doesn't need to own the prison at all. The phone calls. For years, a call home from a public facility could run at rates that would be a scandal anywhere else on earth. And the county got a commission. A cut of what the family paid. That's the design. The sheriff's office signs with whichever vendor offers the biggest kickback, which means the bidding process rewards the highest price to the family. Competition, working exactly as intended, in reverse. The commissary. A captive market buying soap and ramen at a markup, because the food they're served isn't enough, and the food is outsourced to a contractor who wins by feeding people for less. The video calls. Facilities replacing in-person visits, free, with paid video, from a vendor, at a per-minute rate. Your mother is in the parking lot, and you're paying by the minute to see her on a tablet. Money transfers. Release cards, loaded with your own money, that charge you fees to access your own money. Medical copays, that make a sick man choose between a doctor and a phone call. Do you see it? The population being extracted from isn't the prisoner. It's his mother, his sister, his kids, people who committed no crime, who are outside the walls, who are living on nothing, and who will pay literally anything not to lose contact with someone they love. And everyone in that chain knows it. That's not a customer. That's a hostage negotiation with a payment portal. And most of it happens in public facilities, county jails, run by the government you elected. The prison got nationalized and the profit motive just moved indoors, where nobody's protesting, because the sign on the door says Sheriff's Department. That's the scandal. The industry everyone hates touches single digits. The industry nobody's heard of touches nearly all of it. Let me put the knife in. When a state cancels its private prison contracts, there's a press release, a headline, a governor at a podium saying we will not profit from human suffering. And then the people get moved to a public facility that is also overcrowded, also understaffed, also run by an agency with a budget problem. And the phone vendor, the commissary vendor, the food contractor and the medical contractor all follow them right through the door. Because none of those contracts were what got canceled. Nothing changed. The logo changed. This is why I told you your outrage was aimed slightly wrong. Not wrong. Wrong by a few degrees, which is worse, because it feels like aiming. Private prisons are the visible thing. The thing you can point at, divest from, tweet about. They're a lightning rod. And a lightning rod's actual function is to make sure the strike doesn't hit the house. The house is a system that incarcerates more people than almost anywhere on earth. Staffed by a workforce that needs it, sited in towns that depend on it, feeding political power to districts that count the bodies, monetized at every touch point by vendors nobody protests, and all of it would still be standing tomorrow if every private prison company in America went bankrupt tonight. Which brings us to the only question left, the one I think you're actually here for. If it's this profitable, this insulated, this protected, this misunderstood, should you buy the stock? Because you can. So take the mask off. You're an investor now. Not a good person, not a bad person. You have money, you want more of it, you have no opinion about anything else. What do you see? You see a customer who has never once failed to pay. Governments do not bounce checks. Your revenue is a budget line, and budget lines are stickier than steel. There's no recession where the state calls and says, sorry, tough quarter, we'll need you to release some people. Demand does not soften. Demand does not care about interest rates or consumer confidence. You see almost no competition. Two dominant players. A third would need hundreds of millions in capital, a decade of political relationships, and the willingness to have their name attached to this forever. That's not a moat. That's a canyon. You see contracts measured in years, with renewal rates a software company would kill for. Hard assets, physical, sitting on land, fixed costs, a fixed rate, and in the good years, dividend yields that made people whisper. On paper, this is one of the most defensible businesses in America. Scrub the words off the balance sheet, hand it to a first-year analyst, and he'd tell you it looks like a utility. Steady, boring, cash generating. Except, your entire business can be deleted by an executive order. That's the risk, not competition, not obsolescence, not the economy. One signature. And it isn't theoretical. In 2016, the Justice Department announced it would phase out federal private prison contracts, and the stocks fell off a cliff, one of them shedding roughly half its value in a day. Then the administration changed. The directive was reversed, and they went vertical. Then in 2021, another executive order landed, and it happened again in the other direction. Then the administration changed again, and the detention money came roaring back. Look at what that chart actually is. That's not a company. That's a derivative on American election results. You're not buying an operating business. You're buying a bet on who wins in November, wrapped in a security that happens to own some buildings in Georgia, and you can't hedge it. There's no version where the political risk goes away, because the political risk is the product. Then add the money problem. The banks left. One by one, major lenders announced they'd stop financing the sector. Reputational pressure. And it worked. Sort of. It made debt more expensive and harder to roll, which is why both companies eventually dropped the REIT structure. Not a moral awakening, a balance sheet decision. When you can't easily raise capital, paying out most of your income to shareholders stops being clever and starts being suicidal. So the honest answer to, should you buy it? It's a business with utility economics and biotech volatility, whose price is set by people who have never read the 10K and never will, reacting to headlines about a subject they feel very strongly about. That's not investing. That's taking a position on public opinion. And I'd argue that's the most fitting thing about the whole story. The industry monetized incarceration. The market monetized the argument about incarceration. The stock isn't a claim on beds. It's a claim on the outrage. Last thing. This is where these videos usually end with, so we should abolish private prisons. And I'm not doing that, because you've been paying attention and you already know that's a press release, not a policy. So let's price the fix. You want fewer people incarcerated? That's the real lever. And it works. And it has been working. But every person you don't incarcerate is a person who needs something instead. Treatment, housing, supervision, mental health care, a job. Those cost money. They cost it up front. They cost it in your district. And they produce results in about 8 years, which is 2 elections after the guy who paid for it left office. You want humane facilities instead? More staff? Paid more? Trained more? Medical care that doesn't kill people? Programming with no revenue attached? That is straightforwardly more expensive per person than what we do now. You are asking taxpayers to spend more money on prisoners, which is possibly the least popular sentence in American politics. You want to end the phone commissions, the commissary markup, the visit fees? Then the county loses that revenue, and the county was using it, so the sheriff needs a bigger appropriation, which comes from you. Do you see the shape of it? Every road out of this ends in the same place. Someone has to pay, in public, for people they've been taught to hate. That's the actual economics of owning a private prison. Not a conspiracy, not a cartoon. A society that wanted a very expensive thing and did not want to pay for it. And so it built a machine that would hide the invoice. Off the budget, off the ballot, out in some county you'll never drive through, on a balance sheet described as real estate. The private prison company isn't the disease. It's the receipt. It's the piece of paper that shows up when you order something and pretend you didn't. We spend enormous energy arguing about whether a corporation should profit from a human being in a cage. It's a good argument. It's the right instinct. But it lets us skip the harder question: why the cage was full in the first place. And the answer to that one isn't in a 10K, it's in a voting booth. Someone was always going to be paid to hold these people. The only real question was whether we'd ever have to see it on the invoice. Now you know what it costs.